In this video, I'll update you on the housing market. The Federal Reserve Chairman Jerome Powell said the housing market needs to go to a correction. Let's see the August data. As per this chart, home prices are up 6.9% year over year. This is the national average. Homeowners are reducing their listing prices as per this chart. The red line is this year, and the other lines are previous years. As the mortgage rates have skyrocketed, this might be a shocker. The 30-year fixed rate is above 6% and is close to 7%. Average 30-year fixed mortgage interest rates have spiked from 3.2% to 6.38% over the past 6 months. Tightening supply as sellers hang on to those early historically low rates. But the demand for housing of all types still remains high nationwide. To put things into perspective, let's take a $400,000 home. In 2021, at 2.5% interest rate, the mortgage payment was $1,795 per month. Whereas now, in 2022, at 7% interest rate, the mortgage payment is $2,827 per month. Interest rates have surged since the start of 2022, which reflects investors' views that the economy is too hot. Last 2 years, the housing market has experienced extreme demand and limited supply, leading to massive price hikes over a short period, inflated by 43% since before the pandemic. Some people are surprised that we've not seen a housing market crash by now. Based on the supply and demand, it looks highly unlikely that we'll see a crash in the housing market. If you ask me, will home prices go down? I believe yes, but I don't think there's going to be a crash, but we might see a national average of 10% correction. Again, 10% is a national average. Some cities might be higher than others. During the last housing market crash, home prices fell around 35% nationally. So you might have seen my previous videos where I said we'll see stock market and crypto market crash. And if you ask me why we're not having a housing market crash, like I said earlier, it's because supply and demand. For the month of August, the supply of homes for sale were 1.7 million homes. Compared to the previous year, we're up by only 3%. Whereas if you look at August of 2019, there were 2.37 million homes that were up for sale. That's 34% more compared to today's numbers. The inventory back then was much higher than the current number of 1.7 million homes. We'll not see a housing market crash unless there's more supply than demand. Here's a graph of newly listed homes in the month of August. There were 590,000. The number was down 19% compared to last year. Here's what's happening. Yes, we're seeing a slowdown in real estate, but we're having low home affordability combined with rising interest rates. Let's look at the home prices sold above listing prices. Currently, it's at 37.7% as of August of this year, whereas if you look at last year, it was 52%, and we were at our highest near 60% earlier this year. So the buying spree has ended for sure. But again, you need to understand that all this data I'm showing you is the average nationally. There might be some states and some cities which are higher than others. Also, 25% of the home buyers are looking to relocate to a different city. This is 1 out of 4. The top 5 states home buyers are looking to move out to are South Carolina, Maryland, Arizona, Texas, and Florida. Also, the top 5 states people are looking to move out of are Illinois, Massachusetts, Washington, D.C., New York, and California. I know D.C. is not a state, but I hope you understand. Here's the breakdown of top locations buyers are planning to move to. We have Sacramento, Miami, Tampa, Las Vegas, San Diego, Phoenix, Cape Coral, Sarasota, Dallas, and finally Houston. I'm from Houston and happy to see Houston on the list. And here are the top 10 places people are trying to move out of. We have San Francisco, Los Angeles, New York, Boston, Seattle, Detroit, Chicago, Denver, Louisville, and Minneapolis. According to Realtor.com, rent prices have soared in July, but in August, rent prices were still up 9.8% year over year, so rents are still going up. Miami is leading with 21.9% increase, followed by New York and Orlando. These are the top 3 cities where the rent growth is growing the fastest. Also, the new home builders are struggling to build new homes as they're dealing with higher costs due to inflation combined with employee shortages. Also, the rising mortgage rates are making it tough for home buyers. This is attracting fewer home buyers. We're still in a seller's market, and that might continue in 2023 as well. We might get back to normal levels in 2024. Here's the scary part. During the last FOMC meeting, Fed Chairman Jerome Powell said he's determined to bring down the housing market. He said the housing market needs to go to correction. So we need to wait and watch how the Fed will react. I'll keep you updated. Please subscribe, and thanks for watching.